Welcome to the 5-Minute Prime Podcast. Quick, actionable tips to master personal finance and real estate investing. In just 5 minutes a day, we'll help you build wealth and achieve financial freedom.
Have you ever looked at a property and wondered, is this a good deal? If you've been curious about how to get started in real estate investing or how to know when a deal is truly worth your time, you're in the right place. Today, we're going to dive into the world of deal analysis, a systematic approach to filtering out the noise and zeroing in on opportunities that can deliver profitable returns. By the end of this episode, you'll know not only how to evaluate a deal using key metrics, but also how to supercharge your analysis with cutting-edge tools like an AI-powered cash flow calculator. Let's get started. Every successful investor follows a systematic process when evaluating deals. Think of it like a funnel. At the very top, you might have 100 listings. Your first step is to apply quick filters, simple checks that help you weed out properties that obviously don't meet your goals. For example, you might use the 1% rule to quickly eliminate homes that won't generate enough rental income. Once you've narrowed the field down to, say, 10 promising properties, you move into a detailed financial analysis, running numbers for cash flow, cap rate, and cash-on-cash return. This way, you save yourself the headache of getting bogged down by deals that aren't a good fit for your financial objectives. The goal is to be efficient, filter out the noise so you can focus on the opportunities that truly matter. Now, let's talk about the numbers that matter one by one. First up is the 1% rule. This rule of thumb suggests that a property should rent for at least 1% of its purchase price each month. So, if you're looking at a $200,000 property, you want to see around $2,000 in monthly rent. Next is your monthly cash flow. This is simply the rental income minus all expenses, mortgage, taxes, insurance, maintenance, vacancies, and any management fees. A positive cash flow means that after covering all these costs, you have money left over each month. Then there's the cap rate or capitalization rate, which tells you the property's annual return, independent of financing. You calculate it by dividing the net operating income by the purchase price, then multiplying by 100. You will see more numbers around cap rate in commercial deals. But for now, we're simply using cap rate as one of the indicators to evaluate your deal. Finally, consider the cash-on-cash return. This metric shows you the annual return on the actual cash you've invested. For example, if you put in $40,000 and the property nets you $4,000 a year, that's a 10% cash-on-cash return. Most investors aim for between 8% and 12% on rental properties. Together, these metrics provide a solid foundation for deciding if a property is worth pursuing. Now that you know what numbers to look at, how do you calculate them efficiently? There are a few approaches investors use, and I'm going to break them down for you. Rule of thumb methods. Many investors start with quick checks using simple rules like the 1% rule or the 50% rule. The 50% rule estimates that about half of your rental income should cover operating expenses. These rules are fantastic for a fast initial filter to see if a property might even be worth a deeper look. 2. Manual calculations. Some prefer to get their hands dirty by calculating everything manually. You'll take the rental income, subtract all the expenses, mortgage, taxes, insurance, maintenance, and see what's left for cash flow. Then you can work out your cap rate and cash-on-cash return using your own formulas. This approach gives you complete control over your assumptions, but can be time-consuming when you're analyzing multiple deals. 3. Custom spreadsheets. If you like a bit of structure without reinventing the wheel each time, building a custom spreadsheet is a great option. You can create a template that lets you plug in all your variables: purchase price, financing details, expected rent, estimated expenses, and then automatically calculate the key metrics. Once set up, it's a fast way to run multiple scenarios without starting from scratch each time. 4. The GPT cash flow calculator. And here's where the magic really happens. The GPT cash flow calculator is an AI-powered tool that takes all of your inputs: purchase price, expected rent, financing terms, estimated expenses, and instantly returns your cash flow, cap rate, and cash-on-cash return. What's even better is that it lets you run different scenarios in real time. Want to see what happens if your property taxes increase by 10%? Or if your rent drops by 5%, the tool recalculates instantly, giving you a clear picture of how resilient the deal is under various conditions. This real-time scenario testing makes the GPT calculator incredibly valuable in today's fast-paced market. It saves you hours of manual number crunching and lets you focus on strategy and decision-making. Now, each of these methods has its own place in the investor's toolkit. Quick rule-of-thumb methods are great for initial filtering. Manual calculations and custom spreadsheets provide detailed insights, while the GPT cash flow calculator offers speed, flexibility, and real-time analysis that's hard to beat. So, to bring it all together, when you're evaluating a deal, start with a quick filter using the 1% and 50% rules to weed out properties that don't meet basic thresholds. Then, dive deeper into the numbers. Calculate your expected monthly cash flow, cap rate, and cash-on-cash return. Use manual methods or your custom spreadsheet for detailed analysis if you have the time. But for the fastest, most flexible approach, the GPT cash flow calculator stands out by letting you run instant scenario tests and adjust variables in real time. This blend of techniques ensures that you can confidently identify and pursue deals that align with your investment goals. Now here's your challenge for today. Take one property you're considering and run a full deal analysis using these methods. I encourage you to try out the GPT cash flow calculator at reiprime.com to see how it can transform your process. Once you've crunched the numbers, share your insights with a fellow investor or drop a comment in our community. It's all about learning and growing together. If you found this episode valuable, please subscribe, share it with someone ready to dive into real estate, and leave a review. And don't forget to follow me on X at @MaxByMartin for daily real estate tips. Thanks for tuning in. Now go analyze those deals and make smarter investments.